Dear traders, ladies and gentlemen, welcome to our daily trading webinar series, real-time daily trading ideas. Today it is Tuesday, the January 23rd, and of course today we also want to analyze the markets with you and hopefully find some nice new trading ideas for those days. Please, before we start, have a look at our risk disclaimer. If you're trading with Admiral Markets, you're trading Forex and CFD. Those are leveraged products, and you always have to know that the losses can exceed your deposits in leveraged trading. Yeah, in 5 days, 5 different traders. On Tuesday, it's always Paul's turn. You can experience 5 different trading styles on every day, and Paul will take over right just now because we were starting a little bit late. So Paul, please take over now. You get now the microphone and the monitor, and then we can start immediately.
Good morning. Thanks, George. Thank you, everybody. Good morning. I hope you can all hear my voice. Hope you can all see my screen. Good morning on this Tuesday morning, 23rd of January. So, ladies and gentlemen, the last few weeks I've been doing these the sessions. It's been a case of it's been almost like a smorgasbord of trading opportunities. There's been a widespread of them across all manner of instruments and time frames, and so there's been plenty to sort of get your teeth stuck into as we return to our desks after the Christmas holiday break. Today it's gone a little bit quiet, but there's reasons and understandings for that, but yet with all that we can still find one or two opportunities to talk about. So what I see is this week we have I think we have the World Economic Forum there, all the sort of the 1%ers having a big party in Davos this week. I'm sure they're all having a fine time. I'm still waiting for my invite. It must have got lost in the post. But invariably, when all of the the big boys and girls are there, okay, it can be a little bit quiet because everybody else sits on the sidelines waiting for them to sort of make a comment that has some impact on markets. And we've already had a little bit I think this morning, some of the statements from the IMF over the last day or so, okay, with regards to global growth. That makes everybody happy, makes all those 1%ers reinforces the notion that they're doing a wonderful job, and so they can enjoy the party even more. So we're more interested in what we can do as traders, how we can turn that into a particular trade idea for ourselves. So last week, I introduced the idea of the dollar index. For those of you who are completely new to trading, I appreciate we have a bit of a spread of individuals, all right? So those of you who are completely new to trading, dollar index is effectively, as we can see here's the chart, it's the representation of the dollar against a basket of currencies, of which around about 58% of that is made up of the euro. Why is that important? Well, actually what we start to see is that there's a great intermarket relationship between the dollar index and the euro dollar, and we see an inverse correlation between it, which we will come on to in a few moments. But as you see, here's the daily chart I talked about last week. I was interested that we'd broken those kind of recent those lows of 2017, and I thought we might have a little bit of a reaction come back up towards it, which is what we saw, and now we're just holding here. Okay, we're just holding around about this kind of 90 level. All right, we're just holding there. It's just sort of as you can see yourself into a little bit of a block there. If you look at the much bigger picture, the commitment of traders reports, we can see that there's actually some dollar longs being accumulated there, but nevertheless, just the lag between the COT report and actually into a trade can sometimes be a little bit of time. Personally, I would just be looking at this just going sideways for a little bit. All right, if it was to break lower and hold beneath it, that to me is a very, very strong sort of dollar sell-off signal, right? So I take an interest in this. Not surprisingly, if we're FX traders, you need to understand what the big daddy is doing, the dollar, all right? And invariably, if there's going to be another dollar sell-off, well, invariably that has a knock-on effect to all the other majors that we trade. So just hold that picture there forward with you at the moment. So let's have a little look at, as I said, here we go. If we talked about the dollar index, okay, is it's almost like an inverse correlation to the euro dollar, because the euro makes up nearly 2/3 of the basket of currencies against which the dollar is in. So here we go. euro dollar weekly chart, okay, and we can see that, you know, despite all the kind of, let's say, the latter half of 2017, a little bit of a few shenanigans, you know, it's been sort of one-way traffic this year so far. We can see it's broken to new highs, and now we're up to that kind of, we're in a sort of, you know, between about 120, 150, 123 region. If I go down to the daily chart, we can see that actually it's moved up there nicely. And I actually had one of my own trade ideas was actually to look at effectively sort of shorting the euro dollar up here, you know, sort of in that kind of region of around about 22.50. Why didn't I take that trade? Well, the thing that concerns me is that invariably is I'm looking at these kind of recent highs here, or about 121, all right. And what I was realizing is that actually in terms of my reward to risk on the trade, it wasn't enough to basically make me sort of take that trade. What you'll find is that, you know, you'll see people who are, let's say, risking, you know, £100 to make £50, okay? They have a very high hit rate and they think they're wonderful, but the reality is that's not the way to be trading. If we're going to be risking £100, we want to be risking £100 to be making 200, 300, 400. We want to have an asymmetric reward to risk ratio. So I'm just watching this at the moment. I think if I go down to the hourly chart, here we go, on the euro dollar, well, then actually this starts to become a little bit more interesting to me, because, you know, I like this trend line above to the top. There is a trend line to the bottom. I'm not as convinced as I am to the one to the top, but hopefully you can see that is almost like, you know, we're getting a little bit of a triangle there, a little bit of a coil there happening. Okay, now this is what becomes interesting, you know, because then I start to think, well, you know, what have we got going on that could basically shift this, what would make this move? Well, as I said, you know, I mentioned a little bit about Davos, but I think in particular, you know, we're on Tuesday morning. On Thursday lunchtime, we have the ECB conference. Okay, Mario Draghi will be coming out speaking, and invariably, I think that will be the sort of the catalyst that is required for any particular euro move. So, you know, as we know that, you know, we've been in a bit of an uptrend, and we're expecting that to continue. You know, when we look at something like here, like a symmetrical triangle, we look for it to continue in the direction that we came into it. But, you know, it becomes a rather sort of you know, volatile trade, because we're effectively we're waiting for Mario Draghi to speak in a couple of days, and for that to be the as I said, for that to be the kind of the sort of what lights the touch paper for the next move in the euro. So I'm just keeping an eye on this, okay? Even though I could kind of trade that breakout there of the triangle, what I'd be wary of is that, you know, I have 48 hours to big news, and you know, with big euro-related news, and so invariably, you know, there's going to be an element of you know, a little bit of volatility, an element of positioning, and an element of just sort of getting sort of ready for you know, for whatever happens after that. So I will watch and shoot on this. That's my kind of what I'll be doing in euro dollar. Just watch and shoot at the moment, and see how that particularly plays out over the next 48 hours. And kind of what has interested me, though, is that, you know, we've had the euro sterling. Okay, you know, I talked about it for the last few weeks, namely that, you know, it's been in a block here, hasn't it? We can see it's been in a range. Okay, and I had said for the last couple of weeks, when it was up in the middle of the range, that it held no interest to me, whatsoever. You know, because it was just languishing there in the middle. But actually what we're doing, as you can see, we've had a bit of a euro sell-off, all right, a little bit of sterling strength as well, and actually we're getting down to the bottom of the range here, and this is where I've I'm interested to take a trade, and, you know, I've already placed it up using the mini terminal. If you haven't made yourself available of the sort of the mini terminal, the sort of the ladder, which is available on the sort of Admiral Supreme edition, I suggest you do so, especially for intraday trading. It makes life much easier. Okay, you've probably seen me in past videos struggling to get, you know, trades on the sort of the original MT4 interface, which is a bit old and clunky. This is just fantastic. It makes things much easier, much quicker. So what I've been interested in is, you know, just looking at, you know, just sort of looking to have a buy at the sort of the bottom of the range here. Okay, so you're looking at around about the sort of 87.40 level, which is where my order's in. I've had a stop beneath this recent low here, which is around about 86.85. So, you know, that has me with 55 pips of trade risk, and then I'm, you know, looking just to trade back up into the middle of the range. So I've got a target around about 89.15. that gives me a sort of a profit potential of 175 pips. So there we go. You know, we're just we're around about sort of 3 to 1. Okay, 3 to 1. You know, and that's for me, as I just said before. If I'm going to risk £100, I want the opportunity to make £300 in this particular case. That's what I'm looking for. I'm looking for an asymmetric reward to risk ratio. That's what I'm always looking for. Okay, because that means that, you know, I don't have to be right on every trade. Okay, you know, when I have that in my favor, I don't have to be right on every trade. And if I don't have to be right in every trade, that takes a lot of pressure and stress off my shoulders and makes it easier to make good trade decisions. Let's, you know, we've had a little look. Let's have a little look at the DAX. You know, I'm kind of interested in this for reasons. I was looking at it this morning for trades. So here we have. Here's got the daily chart. Some of you may remember that actually, you know, we sort of put on a trade here. Okay, it was on the 4-hourly chart back a couple of weeks ago. We were talking about how, you know, expecting, you know, price to sort of run back in towards this, you know, what is resistance that became support, and then we'd want to see, you know, how the market reacted to it. Well, ladies and gentlemen, you know, we can see how the market's reacted to it over the last week or so. It, you know, it rallied back into it. It dropped back into it, and then prices rallied and rallied up and gone beyond the recent highs. And you know, that's part of that is this morning. And if I start going down to the charts, okay, and the time frames, here we have a look at the hourly. You can see break, and now we're just holding up above it there. Okay, we're just holding up above it. It's not unlike the, you know, the euro dollar chart that we looked at earlier. You know, the euro dollar chart is looking there on the daily going into the hourly. All right, but here we have it on the DAX. Once again, you know, looking at on this kind of time frame, I would have been interested to sort of sell, you know, sort of the break of that low at around about 13,560. Okay, that would have been you know, an interesting trade. But once again, you know, I'm running right into, you know, if I'm looking at you know, sort of looking at you know, sort of a sell about 13,560. Well, I know that, you know, the recent highs, that the kind of that resistance becomes support, that becomes around about, you know, there's around about 13,540. So we only have like 20 ticks of potential profit, which means, you know, I'm looking for an opportunity in a way to basically have a trade risk that is much less than that 20 pips, maybe, you know, sort of, you know, 15, 10, 5, and on my particular trade action at the moment, well, I don't personally see it. I see it just, you know, just the sort of the DAX is, you know, is just, you know, once again it's coiling up a little bit, not as nicely as the euro dollar's doing it. This is, you know, I don't see the price action there terribly, you know, it's not terribly pretty. It's not sort of engaging to get off the side. And so what I'll be doing, you know, this is an indication of, you know, even though there's a trade set up there, I have to sort of hold my horses. All right, I have to hold my horses because, you know, I want to take trades that have a good plan, that have a good asymmetric reward to risk ratio. So I'm just going to keep an eye on that fluid. Maybe it'll blow higher. With, you know, as you can see, we've blown to new highs today. But, you know, I think that you know, it wouldn't surprise me if we drop back down to that kind of level. And when that level happens, we'll then look for the price action there, because that might be an opportunity then to sort of to get on board for the next leg higher. So there you go. It's we had a little bit of a spread through there. As I said, unfortunately, there's only 1 or 2 trade opportunities. As I said, it's a little bit of a quiet week. Everybody's a little bit sat on the sidelines, and sometimes that's what we need to do, is we have the patience, all right, develop the patience to wait for our own particularly good trade setups. So unless there's any particular questions that you know, I'll happily hand back to George. And, you know, as always, I wish you the best of success in your own trading this week, ladies and gentlemen.
Paul, thank you very much for your analysis. I think regarding the time factor, we can also finish the webinar now. If there are no more trading opportunities you can find, do you want to say some last words to our participants, or I should take over the monitor again?
Yeah, I suppose just, you know, a kind of a point to take away for people is that there's a case that, you know, the market is always communicating to you. All right, the market is always communicating to you, ladies and gentlemen. And, you know, and part of our job as traders is to understand and to learn, you know, when that market is communicating. You know, one price bar is a little bit like you know, one musical note on a sheet of paper. By itself, it doesn't really tell you much, but by, you know, you start to be able to understand the relationship with all those musical notes on a sheet of paper. Well, that's how you're able to read it and start to understand and start to actually play beautiful music. I hope, from it. And it's a little bit the same when looking at charts. You know, the market is always communicating to you, and it's about being able to learn to read that, to understand when the market is, you know, is giving you, you know, wonderful, you know, lots of opportunities, and when the market is taking a little bit of a rest, you know, before its next surge. And so that's what I'd like people to think about. The market is always communicating to you. Thanks, George.
All right, thank you very much, Paul. I will take over the display once more. Dear traders, of course, you can contact your local support team at Admiral Markets if you have any questions for them or regarding Admiral Markets, regarding the trading conditions or our platform. Please just contact your local country team for your local on your local webpage. You can find all the contact information. If you have any questions, you can just ask us, and yeah, we are happy to help you. Of course, we will see you tomorrow on the. I think Mike Seidel is the next moderator for Wednesday. He will guide you through the markets and hopefully find also some nice trading ideas then for tomorrow. As of today, we just want to wish you successful trading, and yeah, see you then tomorrow. Thank you very much, Paul. Thank you, dear participants. See you tomorrow.